you're a financial advisor, wealth manager, or placement agent of any kind, investing through the GP can be a great way to increase your returns without increasing risk. When you raise LP capital into one of our real estate investment deals, we will actually let you invest through the GP. Investing through the GP significantly increases your returns. And the reason it increases your returns is that in addition to LP standard cash flow, which is basically net rents, you're getting an additional stream of cash flow, which is a portion of the GP's management fees from the whole asset, which means from the whole equity plus debt. Let's look at a short example. We'll first understand what it means to invest through the GP. And second, we will understand how it increases your returns. You as a preferred investor that raised the $70 million from LPs into the deal will get a significant financial benefit. We will let you invest $6.4 million in that example into the GP. That's a GP that is a GP for that entity only, for that property only. While standard LPs might make 7% generated from properties leased to the United States government, to states in the United States, and major corporations, you as a preferred investor will get two streams of income instead of one. You will get the 7% cash on cash just like the LPs, plus a portion of the management fees that this GP generates from the whole property. That portion of management fees can be very significant and can come up to additional 7%. So while a standard LP might make 7% cash on cash, you will be at 14% cash on cash. Let's look at those two tables. On the left side we see the LP, standard LP investor side, and on the right side we see the preferred investor, which is you, the one that invests through the GP. The safe capital fund, here's the $7 million equity, here's your $6.4 million, the LP's equity, total investment. Cap rate is assumed at 6% on a 10-year period average. Debt is interest only at 4%, and management fees are assumed to be 0.8% of AUM. Cash on cash for the standard LP is 7%. On the other hand, the preferred investor that invests through the GP level invests $6.4 million equity. That's the same $6.4 million we see here. So on those $6.4 million, it makes 7%, which is $448,000. It also makes 30% of these management fees generated by the GP. So that's an additional $462,000. Total cash on cash for you as the preferred investor is $910,000. Your total cash on cash is going to be 14.22%. So when a startup LP is making 7%, you as a preferred investor investing through the GP make 14.22% cash on cash. That is a very significant increase in your cash on cash without increasing your risk. If that sounds interesting, we'll be happy to chat. Give us a call or shoot us an email. Good health to everybody and stay safe.